do we stand? How different is this now that Nancy Pelosi has made this decision?
I think for the we would buy, if we get a dip here, Becky, we would buy it. Based on what we've seen, and I think what the market has seen, the reason it's ho-humming this is it seems very unlikely that there's something here that could actually lead to an impeachment of a sitting president in an election year. So the market is saying, look, if anything, what this does is it increases the odds of a Warren nomination,
because
which is scary.
It's going to leave some smear on both the president potentially, but also Joe Biden.
I mean, I don't know any more than you do, Becky. You're probably less. So we'll see. But it doesn't seem like it's good necessarily for either that well. It plays to each base. We'll see how the middle of the country feels about it. But I think the market feels a Warren run is unlikely to take Pennsylvania and Michigan, which you need to have to get enough electoral votes to turn over the government.
Andres, well, that's certainly what we're seeing with the futures this morning. Dow futures have actually turned positive at this point. How do you handicap this? It's hard to feel like there was nothing that changed, but trying to figure out exactly what changed and how. We did have some guests earlier talking about how it means that NASDAQ, the new NASDAQ, or new NAFTA, I should say, is less likely to get passed, and that's got to be concerning.
So if we look at where the market is now, which is not that far from all-time highs, and you look at the headline risks that we've had this year, right, the trade wars, currency wars, now possible impeachment, and the biggest intra-year drop has been 7%. You would think I was crazy, right, if you didn't know what actually happened this year. So I guess it's not surprising that the market's kind of shrugging their shoulders considering how much it's been able to overcome. Right. Historically, putting aside how different the world is today versus the 70s and the 90s, impeachment hearings didn't really actually dictate the market for very long. It created short-term volatility as it was a new risk, but then it kind of shrugged and the market kept focusing on the things that matter more, such as earnings.
But is the risk political, or is the risk these other larger initiatives which the president is undertaking, which may now be more complicated vis-a-vis China and trade, vis-a-vis so many other issues?
Well, I think the market likes the fact that the trade war, the second derivative of the trade war, has occurred. It's no longer getting worse. One of our ideas here is that we've had a decline in long-term interest rate expectations of about 100 basis points in the last year. The market's up 3%. Earnings are up 8%. That tells you the valuation on the market has gone down, even as the discount rate on the market, in most people's fair estimates, is lower. So the next move up here is simply, if things stay stable and we don't go into recession, you get a revaluation higher, which is very frustrating for bears because they look at the evidence, they go like, earnings aren't growing. They don't need to. We just have a catch-up valuation gain to play here. So the trade war in our mind is not getting worse, and that's been good enough for the market now.